shares. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Are you pinging me? I can't hear you. Oh, that's right. I can't hear you. Just in the den, in the den, just say start. Press start. Hi, everyone. Basil Chapman here on this Tuesday, the 17th of December. And we're looking at the Dow down 229 to 43,489. Isn't that interesting? If we had just made a D instead of a C, I would have been prepared for these I wouldn't have known that there would be 1, 2, 3, 4, 5, 6, 7, 8. The ninth red candle. Unbelievable. Every day, lower highs and lower lows. And so we just gone right by support. It's really important in the 43,400s that we find some support. But in the meantime, the low today has been 43,441, so 43,400. I'm watching this very closely. Look at the S&P, SPX.X. There we go. The S&P down at 28 at 6,045. Weekly chart is at a peak E. What did I say that the Dow was in the weekly chart? I should know this by now. I'm looking at it every day. A peak G/C, so it could be a G. Let's go to the QQQ right now. The QQQs are down just a little bit, down 277 at 535.41. That could become a peak F. Now, what's really interesting, I typed in here a 533. Now, when was the 533 was the round number low of yesterday. If we start trading, then it's got a maximum of 3 days. I usually give it 2 days. If within 2 days, maybe 3, so let's go today's Tuesday, Wednesday. I have to go by Thursday. If by Thursday there is a close under 533, then we have a short-term top in place. If it holds steady, there's still residual strength. Now, isn't this fascinating? You know, in the Chapman, we're always looking for 4 higher peaks. Peak A is the first, and the peak D is the fourth. And at these, other things can happen. The objective is to get you from a buy signal to a buy mode, and that always takes, not always, almost always takes you to at least 4 higher peaks. Well, look at this. You've got the ES. This is the E mini. Makes the peak B. There's no other way I can count that. The peak B is gone from the low right here. It made a peak D top back in mid-October, pulled back quite sharply, and then started a brand new move that was around about November the 4th, and then went to peak A, then a peak B, and that's it. So it's just going to go to a C and a D. The weekly chart is in peak E, the monthly chart is in leg E. Oh, I'm watching all of this very closely. Let's go to the QQQ, and we'll see this is going to a leg F. It could be an instant restart with an F/B, but you've got a D. I don't want to make it so complicated, just hearing all these letters and letters. Those of you who use Chapman wave methodology know exactly what I'm talking about. But what I am saying is that within the context of the QQQ, it's a leg D in the weekly and a leg D in the monthly chart. These are all places where you can start to get some kind of a digestive phase. And let's go to the IWM. The Russell 2000 is down almost 3 points at 231.49. Not good at 231.47. At almost the low of the day of the doji candle peak E in the weekly chart. And there's no new high above 244.98. There's going to be a peak D in the monthly chart. All right, I need to go to the SMHs. They had a very strong couple of sessions. They're stalling today down 374 at 249.57. I have to tell you something. If you're looking for some kind of a top, because it's being so reflexive with news and individual stocks like Broadcom really helped the SMHs because they weren't doing all that well. It's been frustrating in the sense that it hasn't been a V-shape, inverted V-shape Eiffel Tower, straight up and straight down type of top. It's been rotational. And I think that rotational aspect is going to change in the next week. By Monday, this coming Monday, I think you'll start to see some clarity, because as it stands right now, we've been cautiously taking some money off. We added a position yesterday in a trading position. One didn't work, one did work, and it's still working quite nicely in a sector that has been making all-time highs. So I'm trying to play it as a rotational correction that is going to become a little more serious. But the fact that the Dow has pulled back so sharply individually, the IWM has also done that, but it did have a nice session yesterday, but it's still, those are the two weakest links. Then you've got the S&P and the QQQs doing very well. SMHs are right in the middle. Look, here it is. Nothing to see in the weekly chart, just not breaking up, not breaking down. Aha. So what we need is some proof, and I'll go through a couple of Dow stocks that might give us some sense of what's going on in a moment. But first of all, I want to go to the GDX. The GDX is the gold miners ETF, and look at that, peak D. Remember the fourth highest peak D in the daily, fourth highest peak D in the weekly chart, right there in the 44 area, peak D in the monthly chart. Those Ds are, I can tell you that I respect them. I'm not going to dismiss them at all. And while we're all long gold, what happened here? And while we are long gold, I've made a pretty tight stop. I'm not going to be playing around with this. It's still up, but barely up, and I'm not happy about that. Look at gold itself. So the gold miners are failing. Gold itself is making, it's still within a trading band in that weekly chart. Look, it's making the pattern that I call the dreaded X. It fails at a peak A or B, but it hasn't given a signal yet. It will if gold breaks under 2,600, and right now it's at 2,653, down 16. Let's go to silver. Silver is trading, and I'm just waiting for my engineer. I'm going to be following you. If you can just give me an indication that I'm running out of time. He's typing right now. Maybe 2 minutes to the break. Okay, now how am I going to count that? It's 10:13. All right. I'll be watching you very closely, Al. Thank you. So let's just do this. We've got silver. Silver is down 28 cents at 30.77. Look at that. Now you've got, well, this is only Tuesday. We've got a whole week to go. But that 9-period moving average in the weekly chart for silver has gone pink. I have to wait for Friday to confirm it. This is not a good sign. Peak D in the monthly chart. I'm going to go to high-grade copper. High-grade copper is down 0.04. Right, again, for a month now. Now, what am I talking about, a month? This is for a couple of months since August. It's been testing the 200-period moving average without being able to hold a break to the upside. So this is going to be very important. If high-grade copper goes below 4 in December, that's going to be a warning that you've got to be really careful. I do want to go to the, before we go to a break, and I'm watching closely here. 1 minute, good. Okay, give me 10 seconds and I'll be looking at you closely. This is the bonds. Bonds right now are up 730 seconds, and I'm just telling you that I don't know what the Fed's going to do, but there seems to still be some inflation out there, and if you look at the yields, the yields they're not breaking to the upside, but they're really not breaking down. Breaking to the upside meaning going above 45, they're at 34.6 right now. I'm watching this closely because if they get to 35 by Friday, that's
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Yes, good. Okay, I'm done. How dumb can you be? Okay. Al, I'm going to recall you on Skype. And I haven't got my, give me a second to video, change background, mute microphone. Let me just get you sounding much better now, but I can't hear you. So let me just go to this. If you don't mind, let me get the settings right, folks, because otherwise I'm in trouble. So I've got that, speakers, I've got that. I've got it. I am back. No, I'm not. I thought I was back, but I'm not. Oh, yeah, let me open the volume. No, I'm not. All right, as long as you can hear me, Al, I'm going to be looking to you to help me when I'm running out of time. All right, there we go. So we've got the TBT running very sharply. Now, what I want you to do is this. I had a couple of questions, so I'll get to them right away. And, yeah, so in the Dow, we've got Home Depot. Now we're a little bit more weighted towards the interest rate sector because of the different changes that they've made. So Home Depot made a peak E back in November, the week of the 29th at 420.14. It is a leg D in the monthly. So this month will make a peak D if it doesn't go above that level. And then it made an, oh, I got this new mouse. I think that was part of the problem. 421.56 was the high that was made right there on the 15th of October at so 421.46, and I remember looking for round numbers, and I found one 3 days later at 419. We're now at 408. So that's Home Depot. So that says that pop right here that failed to break to a new high at peak B failed, and we're pulling back. So Home Depot is in. It's not even. It's just. Right now, it's gone from a sell signal, and probably today at the close, I'll have to call it a sell mode. The weekly chart is still very strong. I haven't yet got any signal but it is at a peak E. I'm going to go to the next one that I was asked about. This is not a Dow stock, but I wanted to put it in. It was Builder. Remember, I spoke about this right at the top. I said, is this going to be a top of some consequence? Because it's in the, it's directly related to the building, to the builders sector. It's called Builders First Source. Building materials, manufacturing components, makes a peak D way back, and this was back earlier in the year. This was, I think, was that January, February? That must have been February. Yeah, this is. Am I going to stay with this mouse that I just got? Yeah, it's just March of this year at 214.70, and it comes tumbling down. Look, there it is, the silent doji candle the day after the all-time high, and it's pulling back. And where is it now? It goes from the 200s down to 159 right now. This is the monthly low so far. So that's just telling me that you've got to be careful here. The selectivity that we've seen is going to be impacting some of the areas that have been really strong, because those areas just can't go on by themselves. And I'll go through them right now. So the next one that I was asked to look at, so within the Dow, what we have is there are some stocks that are really pertaining to interest rates, etc. But I'll go from Home Depot to the latest one, which I was asked about, was Sherwin-Williams. Sherwin-Williams is trading at 364.68, down 35 cents. It made a peak. Remember peak D? Peak D at 442 back in the end of November. And it's trading right now at 364. That's 40 points. That's a 10% correction so far. And what we're looking at is this is a peak E in the weekly and a leg E, probably a peak E in the monthly. When I put this together, I'm saying, there's reason to be cautious. There's absolute reason to be cautious. What was the other one I was looking at? Toll Brothers. Here we are. Look, here's Toll Brothers. What a move from a peak F in a leg F to a peak F this month. In the monthly, a peak E in the weekly chart, and 169.52 all-time high at a peak D back at the end of November, beginning of December. Then it has 165 round number high in one of the bars. And whoosh, look where it is at the 200-period moving average, actually below it at 132. There's nothing here that says to me you should be very bullish unless you're in particular sectors that are working. So here we are. We've been long AIQ, which is the AI Global X Artificial Intelligence ETF. Made an all-time high at 40.65. Retested yesterday and went just under it. It went to 40 point. I think it was 16, 17, 18, 61. 61, right, just under it, 4 cents below it. And stalling a little bit today, down 21 cents. And all I can say is, within the context of leadership, this is still a leadership. It's made a cup formation. The left side had a MACD very strong. The right side is still strong. The stochastic had a high, and then a lower high. It's at 83% right now. It was in the 92 or 93% area. On balance volume is back where it started. So the technicals are, in the main, very strong still for AIQ. Leg D in the weekly chart, leg D in the monthly chart, all those Ds. Let's go to the next thing I wanted to look at. So that's AI. Look at Bitcoin. Bitcoin right now is trading, and my guess is that Bitcoin is going to be part of the clue, because I might be able to do this later today. I'm interviewed by Jacob. Maybe I can do it by the time I'm with Jacob, if I can resolve this headphone situation. In the meantime, back at the and I am going to need L for you to give me a yell. 2 minutes of music. Okay, let me check. 10:25. Okay, so if the Bitcoin futures continuous contract trading in a G/C right now, with the MACD still negative, the stochastic under 80% and 78, the on-balance volume very good, but look at the price above the 9-period moving average. If at any point in December, I'm giving it the whole of December, which has how much left of trading? December goes to the 31st to a Tuesday, 2 weeks from today. Well, if between now and then, if Bitcoin trades under 90,000, I think we've made more than a short-term top in the Bitcoin. Now, Al, if you can give me a countdown, please, I'd appreciate it. So what we're looking at is the selectivity has been so pervasive that it's distorting what we're really looking at. Look at this. TSLA, this is Tesla, all-time high today. Had an absolutely... Remember, I had a call from, was it Ilka, way back months ago, and Bitcoin was... Yeah, I think it was maybe September, and Bitcoin was at 206. And I said, as long as it's holding the 9-period moving average, this looks fantastic. Well, you want to know something? 206 to 472, that's more than a double. That is amazing. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks, we are back. I've got a bunch of questions here, and I'm just writing them down. Okay. All right, here we go. Excuse me. XLE. So this is the energy select energy area. We got XLE. XLE is the S&P Select Energy Spider Fund, made a peak C. Maybe it's even going to turn into a peak C1, C2, or even a G. But what that top is back right here, and I did not put the price in. No, I guess I didn't. The price right here was 90 peak E/A, right there, and that is the month of April. This is the week of April the 12th. 98.97. I may as well just type that in. 98.97. 98.97. There we go. Okay. That high made a U-turn, made a beautiful cup formation, and did a retest in the 97s, just a little bit underneath the previous high. We've seen these double tops, and they become quite potent. That's why the IWM, that's really important, that double top within half a dollar from November to the most recent high. I got to watch that very closely. So the XLE had its very strong rally. And the question came in is your thoughts on charts on the XLE, please. Is there a bottom in here somewhere soon? Ugly chart for the past 3 weeks. So I discussed this before, and I mentioned that the fact that oil wasn't rallying really sharply over the past many, many months had an implication that the geopolitical situation for crude oil was not extant. It was not there. And that's the reason, one of the key reasons always with oil is that there's this manipulation of cutting back production, increasing production, doing all that. Another one is when there's Mideast tension, you're going to have Suez Canal, you're going to have a whole bunch of things going on. Oil spirals to the upside. It hasn't done that. And remember, I went through this whole thing with the defense stocks, how they've plummeted from their highs. And that's really a very good sign, talking about potential, maybe not pure peace, but at least the unease in the Mideast, the tension is not quite there. And I think you're seeing that reflected in the energy prices. And oil, of course, is a big part of it. Of course, there are other things that are involved in the Energy Spider Fund. But in the meantime, the question is, where would there be support? Now, do I have this chart? Yes, I do. So let's just do this. I'm opening this up, and you can see we've basically been in a trading range with a slight expansion from the 94s to the 98s, but we've been in this range. I usually like to do this. I just grab the left side, and I just turn it into kind of a rectangle and just say, okay, we've been stuck here for a long time. If you're trading it 84 to 88, 10 points, it's 12% if you can get them from the bottom. But look at this. It'll be a surprise to me as well as a surprise to you. If you go to the XLE, in my chart that has the automated Chapman wave support and resistance levels, look, the whole area of 95 to 98 in the daily chart had a bunch of resistances. In the weekly chart, 95 to 94, it went above it, but it had a bunch. If you look at the monthly chart, 100 to 101, huge, from 97 to 100, a lot of resistance levels. There are no support levels in the monthly. If you look at the 120 chart, minute chart, nothing. But wait a minute. Look at 84 to 83 in the weekly chart, and look, 87 to 86, and we're taking out the low right now. So that says this whole area between 84 and 82, that's going to be key on a purely technical. This has got nothing to do with the fundamentals. I'm only doing it on a purely technical basis. So the question is there a bottom in here somewhere soon? This doesn't give you the timing. Timing is based on other things. I'll go back to that in a moment. But in terms of finding a level of support that comports with the MACD and the slow stochastic, because this is how the Chapman wave resistance and support levels, that's how it was done in terms of software. In terms of software by Herb Bruin. And here we are. We've got that. So now I've got I know that we've got something that says there should be some resistance and support. And just to confirm, let me go to this right now. This is the E-mini. And you see, look here, the 1 minute chart had automated 6120 in the ESH contract as resistance in the 1 minute chart, and it has a cluster between 61, 18 and 6116 as support. Take that out, you have to start finding a new set of support levels. So this is the kind of the way it does. It's a slowing mechanism. Let's put it that way. So now let's go to the chart itself, XLE. All right. And you can see if I did a left side, right side price time match, I would go from this low right here to this trough right there. I'd go click, and we've actually gone there already. And that says, Mister, you're looking at the wrong time frame, because we're already there. Look. Fat. Oh, no, we're not. We've got a week to go. Well, in a week, let me just treat this as the one that we're going to look at as the core, because I could make it from here and then always bump up against the resistance. So right here is very important to hold at 86. 85 is very important. Break 85, and I'm looking at this. Then I take my peak of consequence right here, and I draw in the Chapman wave inside wedge target support line. And that comes in right there. So we're not even close to it. And it says you probably need to push this out a little bit more. And then what I do is I say, if it doesn't look right, the next thing would be a particular candle. In this case, I'd point to that doji candle. It doesn't really matter. It says that in December, I'm going to the 23rd, 23rd. Yeah, in December, the 83 to 82 level should be tested. And what I would like to do, if I had more time, I'd take a little bit more time and I'd do it like that and I'd say, that's perfect. So I'm saying that by the third week of December, we're now into the second week, so third week's next week. By next week, or the end of December, this is the level. What would take it to stall? You'd have to have a price movement that goes into the middle of this big ugly bar into the 88s. So anytime, any day, in the next week and a half, that the XLE can pop up into the 88s. It stalls the downward movement, but the MACD is really weak. The stochastic's flat at 2%. That's like looking at it at 98%. Remember when something's at 98%, I say as long as it's flat, it's really positive. As long as this is flat at 2%, it's really negative. So I'm looking for the 82 to 83 level to be tested in the next 2 weeks. Hope that helps, Jimmy. I'll be right back. COTF.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
On the quantum stuff, thank you very much. That's really informative. I love that. That, in a sense, explains, at least for me, how I can just rationalize it and unrationalize it, because it's an irrational. Look at this, LEAS, Seal Square, trading up 52 cents today, 297, up 21%. It's gone from the 40-cent area just about 8 sessions ago up into the threes. Amazing. 320 was the high today. Yesterday went almost to 350. And the next thing was QUBT. QUBT is, this is quantum, I believe, quantum computing. Yes, let me just get that updated. There we go. There we go. And it's trading up whoa, unbelievable. $5 at 16.36, up 47%. That's just from yesterday. Now, yesterday was up from the $6 area into the 12s. Yeah, so this is the part that says to me, this is where you have to be really selective. These are things that if you're at your computer and you have a trading system that allows you to go in and out, you don't have to say, a little pop-up says, do you really want to buy this? And you have to say yes, and then it goes back, and then it says, do you really want to sell? You want to just go click, 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 click. These are tradable, and really good money can be made. I should have had one of these, at least for my subscribers. I was so busy just looking at the market that I didn't want to have my mind distracted. But no, I'm not. I'm looking at these things, and even here, they are still in the long term, because these are quantum computing. Once the public starts to become aware of it, this could very well turn into the area that, like any of the areas we've seen over the decades, that become really popular to the public, even like a Bitcoin. So I'm watching this closely. Now, next question came in. Can I look at PFE? This is Pfizer. Yes, I said before, I think Pfizer is trying to build up, independent of what it has in the whole drug area, but Pfizer Pharmaceuticals, it's one of the big pharmas. This is not going out of business. It's trading at 26.24, up 98 cents, up 3.9% right now. Just starting a leg C in the daily and a leg B in the weekly chart. That monthly chart, remember I said the dreaded H pattern, it did take out the left side low, but it's positive that it closes above it. Looking out into 2025, if Pfizer is able for 2 out of 3 months to close above the high of July, which was 31.54. That's a long way to go. But I'm looking bigger term. Then this is saying Pfizer's a comeback kid, just like you had Cisco, just like you had Adobe, Microsoft, all these stocks that were dormant for so long, and then they just come alive again because they morph. They really internally, like IBM, which for decades kept saying, we're doing this, we're doing that, and they did nothing. And here's IBM going from the 100 area to 229 after a 239.35 high of the 9th of December, and that same day had a 230 round number open, and it's now trading at 229. If it goes above 230 at any point, even for an hour, that's really positive. If it fails to get there, that's going to say IBM is now in this consolidation phase. Okay, I mentioned Microsoft. Let's go there. Microsoft just up a fraction. It had a fabulous move to a peak D, not an all-time high. So if you go to D under the previous all-time high, that usually says, wow, you didn't have enough power to go right through it in a C and then make your D. So it says Microsoft is still the laggard in this whole area, but that's the rotation that we've been looking at. Remember how many days there was some weakness in the QQQs, and then Microsoft suddenly came on strong, and the next time it was weak when the Qs were strong. So that's in this area that says great company, just in a high-level consolidation, trying to get it right before it breaks out to all-time highs. Next question came in. Could I look at, where did it go? CRDF, I believe it was CRDF. I'm not sure the question was for me. I just saw the Cardiff Oncology, Cancer, PLK1 inhibition. It had a huge move from the 1 area up into the 6s, pulls back sharply to the 2 area. And now it's at 4.73, peak A, peak B. Oh, that had a peak E top. Is that correct? Was that an E? Oh, this mouse is actually a little slow, huh? I thought it would be even quicker, but it isn't. So now I'm looking at peak A, peak B. Yeah, that's a good sign. Oh, it could be because it didn't take out. Yes, it did take out. Okay, this is a brand new. So I have no choice because the stochastic's almost at 80% to say Cardiff Oncology, CRDF trading at $4.66, up 63 cents. Something's going on that the gap wasn't filled. It was tested, but it wasn't filled, and it's in a leg B right now. That's a good sign. Monthly chart is a little bit more. It's A, B, C, D. Already gone to a D, A, B, C, and a strong leg D. Oh, over all the resistance levels. Hey, this is a good one. Next question came in right here. Oh, FXI. I forgot all about that. FXI is trading. This is the China large cap ETF, trading down 6 cents at 30.54, had that big spike to a peak C, that's failing, and a peak D in the monthly chart, the weekly chart, right under the 200-period moving average of 30.94. It's at 30.54, and the weekly chart is gone. A monthly chart is gone to a B. So iShares, this is not going anywhere. It's just kind of sitting there, struggling. That's that's the word, struggling. A question I had about. Oh, the GBTC, I never did that. That is the actual trading, the Bitcoin Investment Trust. This is a leg D, still a leg D in the monthly chart. An E went to an F. This could turn into an instant restart in the weekly chart, and I've got it as a G. But from my perspective, this is very much like a G/C, and I would not be surprised if this G/C actually has a little bit of a turn down and then has one quick pop to a new all-time high, and then I think we've got to be careful. Now, where would I find it? I'm going to have to try to find it. I have a blank chart that has two. What if I can do it here? No, I don't have it. Which has the possibility to put two overlapping charts, and then you can see, is one leading, is one lagging, do they move together, does one go, is it a counterpoint, like a Bach counterpoint, where the melody goes one way and the counterpoint theme goes the other way. That's what we'll be looking at. I'll try to find a chart that I can do that on. But I needed just to clarify a couple of things. One is that the Dow, let me just see, I wrote down a bunch of questions. I've done most of those. The Dow is in a sell mode. the daily chart, not the weekly. Weekly hasn't budged. It's still at a G/C and a monthly chart of leg E. But that's something that I have to respect. It isn't often that the Dow is just in its own trajectory to the downside, while the other indices generally are moving to the upside. So I wanted to clarify that we've already got the Dow in a sell mode, and the IWM at this particular point has joined it in a sell mode. That's just the designation. Okay, I'll be back.
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Amazing money!
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, 2,100 total.
Oh, wow!
But you have to hurry because this Holiday Tiger Dollar Double Bonus Sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN!
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks, we're back. So let me just sum this up. Look, 106,000 round number low in Bitcoin. If it takes that out today, then of course that round number doesn't mean anything. But I'm just watching everything. I believe that this is not... There's a rotation going on. There is still buying coming in, and as long as you've got some sectors that are working like those like the BUQT, like the computing area. As long as you've got something like that, the focus is lost on the bigger picture. But the bigger picture, I think, will change if the Bitcoin coincides, and this is the work I'll be doing a little later today or tomorrow. I hope to do it just to have a relationship, a correlation between Bitcoin and the general market. So far, they've gone up together very nicely. So I'm watching to see if they're coming down. But I think it's very selected. I think you've got the Dow sell mode in the daily, IWM, the Russell 2000 sell mode in the daily, the XLF. That is the financial started to pull back quite sharply, and that also has to do with the yields. But look at the KRE. KRE is also, and KRE is the same concept between the S&P 500 and the small caps, the Russell 2000. I'm looking at this as the XLF, the large cap money center banks, and the regional banks. So I'm watching this and I'm saying one by one they peel off those jet fighters. You see them in a V-shaped pattern, then one by one they peel off. I think that's what we're looking at here. So you don't get tops are made in a rotational basis very often. Bottoms are made in synchronicity. So I'm just watching this and I think one by one is telling us, be careful. Each sector is starting to find less and less leadership. Semis, very good example, and we'll see what happens. So we've taken an insurance policy out there, and we'll see whether that's going to work. And very selectively, our longs, I love our longs. I want to keep those core positions, but we've taken off. We've raised some cash. So just be careful. That's really what I'm saying. Hey, I'm saying be careful. I'll be back a little later on today with Jacob. Check out my opening call. Don't forget the Tiger dollar sales. That is, what a bargain. They already have used it as